Hello and welcome to the MikoBits show, and I'm your host, MikoBits. Today I have another exciting show for you with Christian Kamir, who is managing partner at Sustany Capital, which is a venture capital firm. So I'm actually very excited to talk to Christian today. He's very much sort of scientist and a first principles reasoning person about this space very broadly. So, you're going to get, I think, very well considered perspectives and well researched perspectives. So, that's kind of what I'm excited about. One of the things that we should be aware of is that this video program is opinion and for information and entertainment purposes only. It's not investment advice. That's something important to consider. Before we start, if you're interested in Bitcoin and blockchain, please consider clicking that subscribe button and also click the bell so you can get notifications about future videos that I might post. Thank you. Okay, and without further ado, let's get to it with Christian Kamir, Sustany Ventures. So excited to have you on board.
Yeah, well, thanks for having me, Miko. How are you?
Very good. So excited to hear a little bit more from you about how is it that you got into this whole Bitcoin space?
Well, yeah, let me give you the 90-second nickel tour. My partner and I have been in technology investing for some 20 years. The accent in my voice originated in Germany. I was a software developer for a very brief period of time. All that good at it, so decided to go to law school. When I came out of law school, because I was writing on a doctor thesis at the time on number regulation for telecommunication, I ended up becoming general counsel for one of the early internet service providers, and we got very lucky to sell that company at the height of the .com, early 2000. And so I promptly retired from the law after a few years of being a lawyer. And a few months later, I moved from Hamburg, where I was living, here to Southern California. We set up our first venture fund. And in 2000, we were originally focused on multi-massive online player games and voice of IP solutions. And probably most people that have been in blockchain space for some time can appreciate the similarities between those topics. With
Absolutely.
MMORPGs already having in-game currencies with US dollar exchange rates in the 90s, and then voice of IP is probably the most used peer-to-peer solution. So as such, we were early exposed to the blockchain space. My partner formed the Ethereum meetups here in Orange County 6 years ago, and we started working on our thesis for the space. And for the past couple of years, we've been mostly making seed Series A investments, given the nascency of the states, the state of development in decentralized software. That's kind of the term I like to use for it. And then also we have a hedge fund team here, and we also have a couple of developers in India, but mostly we focus on typical VC technology investing, buying equity. And yeah, in the future, we'll for the first time also invite some limited partners into the fund, which we didn't really have the need for the first couple of years, given the check sizes being like 50,000 to 3 million at the most.
Yeah, that's fantastic. So what I love to do is kind of zoom all the way back to like the 30,000-foot view, right? Which is,
Sure.
How do you broadly see the blockchain space as a venture investor?
Yeah, so for us, it's mainly about value transfer system, as I touched on earlier. And I think it's important to understand, and that's, I think, largely misunderstood, what is the invention in Bitcoin and what are the innovations that are possible on the invention. And so to that extent, I encourage everybody who hasn't already read the Bitcoin white paper, or even if you read it, to read it again, because
Yes.
we still don't have the original premise that the Bitcoin white paper set out to do, which is peer-to-peer cash, still doesn't exist. And then more importantly, it's important to understand what is the actual invention. So the invention, kind of on a technical level, is not blockchain technology, and it's not proof of work. The invention is to put those two things together, which then, on a mathematical level, solve kind of the Byzantine's general problem. But on a more practical level, it lets you create quote unquote digital bearer instruments, or more importantly, self-executing software, which is oftentimes referred to as smart contracts, which is kind of a funny name for something that's not smart at all, right? Because
Yeah, smart
it's really,
contracts is definitely annoying. One of the things that I think will be great with you is that you and I share a passion for making sure that people understand the terminology and that the terminology is actually accurate and useful, right? So, I like vending machines. I think that's a Nick
yeah,
Szabo terminology, but I
yeah.
think smart contracts is confusing.
Yeah, I mean, that's what was the term that I used in my last Forbes article, digital vending machine. It's a term that I've been using for a long time too. Not as long as Nick, obviously, but yeah, I think that's the important part to understand. What is the innovation? So the invention is to solve the Byzantine generals problem. Then you can innovate on top of that. So the three main innovations on top of that are essentially then self-executing code, like what we refer to as like solving the double spend problem. That's kind of the most important. All the other innovations are kind of derived from that. So the most important one that a lot of people don't talk all that much about anymore, it seems, is that of the DAO, right? The decentralized autonomous organization.
Sure.
I think is long-term the most important invention, because it will change capital formation to a large extent. It might change categories of business altogether, right? Where you have rent-seeking middlemen in a platform play that can be and will be, in my opinion, largely replaced by self-organizing systems where participants get to reap all the rewards, and there's as little rent-seeking
Yeah,
on the platform.
I love that you're riffing on this, right? Because, I think from a beginner perspective, like the idea of the Byzantine generals problem, I just want to really quickly get to it, which is that what you have is two generals who are passing messages through a city that's untrusted, right? And if you pass a message through the city, then the messenger can be like kidnapped, the message can be altered, like it's not trusted, right? And so basically the thing that Satoshi figured out is that you can actually get rid of the need for a trusted intermediary. He's not saying you get rid of the intermediary. The intermediaries are there. They're there,
Sure.
but he gets rid of the need for you to trust them, right? So now you can pass messages through this fabric without trusting the intermediary. So I just want to kind of reinforce that. And so the thing that's important about what you're describing, as a foundational insight is that you're really kind of pointing towards the emergence of this kind of, like, I guess you call it like self-running software, right? And the thing that I think is brilliant is all of this is really an extension of like open source, right? It's really like an extension of open source, and it's the creation of kind of almost this fully decentralized organizational structure, but kind of bringing it towards kind of more simplicity. Like the thing that I wanted to assert is, I described the Bitcoin as the bank of the internet, owned by the users, right? And so the idea is exactly as you described, which is that these entities, these leaderless entities, essentially they basically distribute profit to the user base, right? I think you're absolutely right about that, and I think DAO, or decentralized autonomous organization, is a good kind of mindset, and a lot of people exploring it. So I just want to simplify it for some of the audience members, but please go ahead.
Yeah, so then lastly, and we briefly touched on that, you can create quote unquote digital bearer instrument, kind of like the equivalent of your physical cash. But that's still missing, because in my opinion, like the lowercase b Bitcoin, the mining reward is just that. It's a network function, right, that people speculate on, but the actual objective that Satoshi set out to create, which is peer-to-peer cash, that actually hasn't been achieved, right? Because
Sure.
it's important to understand what is kind of the remaining function of money. The remaining function of money is mostly that of language, and I think that's kind of a good starting point to get into.
And by the way, like Ethereum has not delivered a world computer as yet either. So so I think the white papers are still people, they're still a work in progress.
Well, it's always the same. The problem with tokens and money itself is whenever you conflate the functions, whenever you have more than one function, then it tends to destroy the main intention that you have. right? So as in, obviously, if you have a limited supply in Bitcoin's example, people will start hodling it, right? And
Yes.
If the price is going up because you're trading it on custodial centralized exchanges, then it's not a good commodity to use for running your world compute. And so those things, in my mind, are very obvious, and we have so many examples
Yeah,
now.
I saw Jake Bruckman actually posted this morning on Twitter. He said Ethereum $74 gas transaction fee for transmitting a $5 transaction. So it just underlining what you said about like the unreliability of the kind of network in a congested state, right? And it's clearly because of DeFi, like Ethereum is heavily congested right now.
Yeah. So, yeah, I think the important part here to understand that really the remaining function, and we should break this down in granular detail because it's so little understood still on a daily basis. People use that term money, and everybody has kind of a very different idea about that. But it's really important to understand that the functions of money have been split. I was just posting this poll online to understand if my perception that I have in that respect is correct, that there's a lot of people still holding on to this very old definition of what is money as a medium of exchange, store of value, and unit of account.
Yes.
Which I think actually was already wrong when Jevons wrote it.
Yeah. It's so funny, right? And I think what I love about all these conversations is that I always feel such a strong kindred spirit when I speak with you, because I feel like we're both operating from these first principles, and that we've both arrived at some, oftentimes intersecting conclusions, but from different places, right? And that's always very, very enjoyable to hear.
Yeah, because I mean, our perspective is obviously very much that of a technology investor, right? And so we're trying to apply as much as we can the kind of principles of scientific methods to the topic of investing, right? And from that perspective, you kind of need to understand the overall ecosystem, and you want to put forth thesis, and we do this on a continuous basis, kind of put our thesis to the test by essentially running it against startups in the space. So we have been doing this like 650 times over the past 6 years, I think.
That's brilliant.
And so essentially we got 650 peer reviews, because obviously all of these startups in that space, they're looking at one particular problem that we look at scale in different categories and how they intersect with each other. So, but maybe to bring this back to the topic of money. So my starting point for money is always simply that of language. And I'm trying to make like these more metaphorical examples that the larger public can understand, because I think it's super important to understand this. So if you think about like three people that stand in front of the same house, right? And so the first person thinks, oh, I think the house is worth $1 million. And the next person looks at it, it's like, I think I would pay about 890,000 euros for that. And then the next person next to him is thinking, well, I think that might be worth 20 million pesos. So what this really tells you, that money, as far as the individual is concerned, as if you're not introducing another party, is simply a language of value. And it's simply the language of value typically that you've been indoctrinated in, right?
Yes.
If you grew up in the United States, you're thinking in dollar terms, right? And it's just your language that you have been indoctrinated in. Same with euro and yen and any other currency. So it changes the second, obviously, you're introducing a party. So let's say this house is somewhere in Kyrgyzstan, and the seller, potential seller of this particular house, has never heard of the US dollar or the euro or pesos for that matter, but he has his own currency that is native to him, and he wants that. So what's happening now is you have to translate this, right? So you have to translate it either for the buyer or the seller, or for both, or you have to both learn a new language. And so like fast forwarding this for just a second to like the startup space, this is kind of the worst thing that you can do as a startup: introduce a new language with your product. Right? That's the greatest friction you could ever introduce. It's like, oh yeah, in order to run this machine, you have to use my token, and it's called transformational unicorn burst. And in order to do 5 transactions, it costs you 15,000 transformational unicorn bursts or something to that extent, right? So, and that's also why, obviously, when you have a digital wallet of sorts and you're holding any Bitcoin, Ether, or any other of the quote-unquote cryptocurrencies, you will always see a translation, right? You will always see a translation to the unit of account, the language of value that you are used to. That should tell you something, right? It should tell you a lot of things. A new language is friction, but B, also money itself is actually friction. And I'll think we get into that. But so the next step,
life is friction.
Life is friction, that's true. Yeah, so moving on from our example, right? So now I've translated it, and so now we speak whatever language we decided on we want to use in our interaction being a contract. So what that means is that all money, as soon as more than one party is involved, when it's just happening in your head, is actually an agreement. That's all it is. Money is an agreement. And it's usually a secondary agreement to a primary transaction.
So you're really saying it's a network protocol.
Actually, no, but we'll get there.
Okay, go ahead.
We'll get there. So, no, from a legal perspective, all money is just an agreement, right? And so we tend to obviously default for everyday transaction to whatever agreement is most practical, and usually that agreement tends to be fiat money in some form, right? Either I swipe my debit card or I hand you some cash, or I swipe my credit card, and there's different rails for that. That's your network. But it's still a secondary agreement because there's usually, at least not in the United States and most developed nations, a legal requirement that you use fiat, right? The only exception for that is typically if you make payments to the government in form of fees, fines, or taxes, they require that you pay them in their shitcoin.
Yes.
Excuse me. But any like other transaction between two parties, it's usually a secondary agreement, and oftentimes it's just an understanding, right? Because we're both in the United States, we both quote unquote speak US dollar, and so we just default to that. There's no reason to default to it, and in fact, obviously, if you leave the confines of your nation states, you will figure out, well, my default is no longer the default. The default is either something else or something that I need to agree upon with the other party before an exchange can happen.
Right.
But you can think of, and that's kind of the framework we're using when we look at all these different categories of money and value transfer. You can think of all of those as a variation on that theme. They're all agreements, right? They're all contracts.
Great. Yeah. So my way of looking at it is, that a lot of what happens today in digital is that these agreements are effectively codified in the form of software, right? And I think the thing that's funny about it is I think about it in terms of software packages. Right. So people think money is data, and I think that's what confuses them. Right. So they, like, for example, even like a Nobel Prize winning economist like Paul Krugman can say completely rubbish things like you can't buy a sandwich with Bitcoin, therefore Bitcoin isn't money, therefore Bitcoin is worth nothing, right? And like the logical syllogism is kind of like reaches sort of the 10th grade of illogic, right? Because the thing that I think he misunderstands is if you go to Starbucks and you buy a coffee, you can buy it using a credit card, a debit card, a gift card, cash, waving your Apple Pay, so each one of these is a different software package. The Swift system is a different software package. And so the idea that the Bitcoin is somehow this all singing, all dancing package that serves every single value transfer use case, no such software exists. Like no one should expect there to be such a software.
Yeah, so maybe to bring this back to a higher level for just 1 second.
Yes.
So in big strokes, the way I like to categorize this is creation of money, storing of money, and movement of money.
Great.
And so in the creation part, we currently in the United States, to use that as the prominent example here, we have two main classes of money creation, right? So one is the money that gets created by the Federal Reserve. The other money is that being created by commercial banks. And depending on what data you believe, the money created by commercial bank is anywhere between 80 to 97% of all money. And so that's why it's always a little bit frustrating to me when I hear these discussions around inflation specifically, and they just focus on Federal Reserve money printing. That is
Well,
not
maybe you
worth.
can help. Maybe you can help the audience by explaining a bit about how commercial banks operate in the function of production of money. I mean, it ostensibly sort of double spending, but I'd love to kind of have you explain kind of fractional reserve and just simply.
Oh yeah, now fractional reserve is a misnomer. It hasn't existed for a long time, if at all, at any given point in time. So most
So
money.
where's the money coming from other
So
than
yeah,
central bank?
so let me look at my table here. So that is status quo of today. So if you look at, let's call it all the money that exists right now in the United States, 35% of that money was created specifically for mortgages. And the way a mortgage is created, you create this paper, this agreement between the bank and the borrower, and the bank, if the conditions are satisfied, deposits money into the account of the borrower. Let's say it's $500,000, who then hands it over to the seller of the house. Well, that's money from nothing. This is money that didn't exist, right?
Yeah.
And it's a non-event for the commercial bank because it's totally balanced out on their balance sheet, right? There's an equivalent mortgage document that is in the same amount as the money they just doled out.
Oh, this is great.
And it's actually over collateralized, right? Because you actually don't get to borrow 100% usually. So it's actually a higher amount. So that's most money in the world. But also what's semi-interesting what's a little overlooked is, so the second largest class of all money in existence right now is actually certificate of deposits. So that's also lending. So mortgages are lending, and then CDs are lending. It's just that this lending is from typically the consumer to the bank. So that's the second largest class. It's about 12 trillion right now, mortgages being like close to 16 trillion. So combined, this is like 63% of all money at the moment, right? So the other way, obviously, that commercial banks make money or create money from nothing is lending then to corporates. And that has been prevalent, as probably everybody that watches this has heard of at some point in time, for the past decade or so, being used to borrow quote unquote cheap money, and then a lot of that has been used to corporate stock buybacks, which has then created, as an extension of that, the kind of stock bubble, right? So if you talk about inflation, I'm going to stop breaking down the different classes for a moment. But if you talk about inflation is if you create new money for either an asset that already exists, and or if you allocate it to non-productive activities. That's what inflation is, right? So
yes.
Because then downstream, what it does, obviously, for the individual, it increases his expenditures, right? If you're lending another $500,000 for the same house that already existed, so overall, yes, you created another $500,000 to the overall money supply, but the primary inflation is actually happening within that asset class. So, and as a consequence, so either if you the asset holder, okay, you might not be as affected as much, although you probably paid a higher price than you needed to, because obviously this money didn't exist, and overall it's increasing inflation to the base. But more importantly, and that's what we've seen as a tendency over the past 20 years, it obviously makes renting more expensive, right? So that's why if you're not an asset holder, you downstream then pay more for your rent, which
So tying this back to kind of like the collapse of Lehman in 2008, right? Like the thing that I think is fascinating is that at the ground level, sort of the thing that was happening is that at some level the loans were the magic loan money that was being created by commercial banks through mortgages actually turned out to be sort of under collateralized as a function of the ability for these people to pay, right? So the idea is that you put the liability onto them, and now you have this beautiful balance sheet, and it's like, oh, we've got this wonderful asset, but at the end of the day, like if the revenue isn't coming, then it kind of grinds to a halt, right? That's the doom scenario.
The problem was twofold. So there's credit and then there's lending. So credit is something that occurs on the side of the borrower. So it's actually a function of the borrower, not a function of money or anything, or it's not a function of the bank, right?
Yeah.
It's like your credit score, if you look at this from an identity perspective, is being recorded on the identity level.
Right.
And so that was being overinflated, right? It was said that if you make $50,000, all of a sudden you were capable supposedly of paying this particular type of mortgage, but then also on the other end, yes, assets were overvalued, and it's still puzzling that no one went to prison for that, really, because as far as I know, everybody involved in creating these was well aware that A, these assets weren't really worth what they were saying they were worth, and that B, the people that supposedly were able to make these loan payments were actually able to make those loan payments, right? But anyway, may it be as be. This is still going on, and that's the largest part of inflation. So the real inflation, and that's actually not even counted in like spending.
Sure.
Funny enough, which makes no sense. But so if you would account for that, it would be anywhere between 10 and 15, and probably around 12.5% inflation year over year. And within that asset class, and then subsequently within the overall money supply. Then the third part outside of the corporate lending part that we can talk about is the inflation of education. All right. So unfortunately, whenever governments mingle with the free markets, it has externalities. In this case, government guarantees those educational loans, and you can default on them. So there's little to no risk for the banks to create new money to provide those loans. Hence, we have inflated the cost of education by, I think, 2 orders of magnitude over the past 20 years. And what's worse is there's no cost-benefit analysis in that case, right? So as of late, we have invigorated kind of our outreach to universities specifically to tell them, it's like, this is what we need. This is the type of education that we need. Please stop teaching people these particular type of definitions of money. Please don't tell them that blockchain is a DLT. And so we're trying to
yes, please stop.
We're trying to
Thank you.
to reach down to actually get people to learn the things that we actually need in our economy. And so in my opinion, that probably will cause somewhat of an outcry. It's like we should close basically every single law school right now. Right? I mean, that's an area we invest in legal and regulatory technology. And we already have many more legal professionals, and as you know, I'm a lawyer by training, than we will ever need. Right? And so I don't quite understand why you still have law schools open. Same with a lot of other functions that we're still teaching that I don't see a future for those people in the market, right? But
they can become VCs.
They can become VCs. They can become computers again, right? You know what the original computer word meant, right? It was the name of a person that was tabulating numbers, right? Yeah, kind of the same thing. It's like, my expectation is that in 10, 20 years, we will look back and think, oh, a lawyer. So, a lawyer used to be a person who writes contracts, right? And you'll have your appropriate DApp or app for whatever legal function you want to imply, and you can just talk to it, and it has all the knowledge of all the lawyers that ever lived combined, right? So yeah, coming back to like what causes inflation. So those are the kind of main three sources of inflation, and the important part is just to understand that the primary inflation is within this particular asset class, if you want to count education as an asset class in a way, right, in this particular sector.
Yeah.
And then it
great
sort of
perspective.
trickles down to the overall money supply. So yeah, so most money is created by commercial bank, kind of in summary. So there's very little money that kind of the Fed creates, right? It's like,
but I think you're underscoring something very important, right? Which is that the nature of centralized policy and the mechanisms through which externalities are created by effectively sort of backstopping, right? So, you know, if you de-risk a sector, then, you know, people can actually kind of go into it with impunity, right? And that was, to some extent, that's kind of the scary prospect.
Yeah, it's skewing the incentives, right? If you could create new money and there was no risk to it, you would keep doing it. Obviously, you would keep doing it. Why wouldn't you, right? You'd be dumb if you wouldn't.
Yes, right? Yes, that's definitely a thing. Yeah, very good, very good. So, so with respect to kind of investing in the blockchain space, like, you know, where do you see, you know, opportunity? How do you kind of like analyze it from that perspective?
So we look in really, really broad categories as a starting point to see where this category is heading. And to give you a big picture, so I have this big whiteboard in my office, and it's all the way on the left is kind of the largest number, which is that of interest rate derivative trading, which is some in the neighborhood of 520 trillion. And then our smallest class, and that will probably sound funny in a way, is that of remittances, which is all the way on the right, which I forgot what it is. Let's say it's 700 billion or something to that extent. And then what we do within that class, I will try to come up with an algorithm that kind of summarizes the BTAM. So what would I mean by BTAM? It's the total blockchain addressable market. As in, how can blockchain influence a particular segment? And that's typically done by removing the middleman and the associated fees and time that are associated with that. And so how might that look in 5-10 years? That's like working backwards from that thesis is how we look at projects within that vertical. So if someone pitches us a remittance solution, we look at this from that perspective, and then we'll obviously get a more granular data within, let's stick with the remittance example for a little bit, to see what particular channel they are addressing. But then more importantly, and that's why you need to understand the big picture in my mind, is does our thesis support alpha within that remittance space itself? Or do you have to come up with a new way of making money, quote unquote? So what I mean by that is, to fast forward to what my personal expectation for that space is, remittance as far as alpha itself should and will go to zero, as in there shouldn't be any friction involved. Because the reasoning here being, if you look again at the original battle cry of the Bitcoin white paper, the battle cry is peer-to-peer cash. Right?
Yes.
So what are the facilities of cash? The facilities of cash, I hand it over to you, I don't have it anymore, you have it. Also, there was hopefully little to no time involved in doing this, and then also there were no fees, and it's also anonymous. So if you are still charging fees to do remittance, etc., if the outcome for the people that are involved in that transaction is still that you are some form of friction, then someone else will address that friction, right? Eventually. And so in my mind, the only way to create a sustainable business, and that's kind of the reason why we called ourselves Sustany, we're looking for sustainable businesses, is to come up with a value proposition that doesn't introduce you as the new middleman, and your only value add here is that you're charging a little less fee, or you're providing it a little faster. Because in my mind, you need to do at least three things, right? You need to be faster, cheaper, and then you need to be something else. You need to provide another value add, and that value add, I mean, that's hard, right? So that's probably the hardest part to define. And so that's why you see a lot of approaches where people introduce yet a new token and trying to make money on that token and then list that token, and or they introduce another business model that really has nothing to do with the initial value proposition. So that's the hardest part to define. So, but yeah, before I go down way too far any particular rabbit hole. So in that space, or in all of these kind of value transfer spaces, the next one would be payments overall, which I also think will go to zero in terms of making alpha from it itself, right? So I think all the value for quite some time is in what I call the on and off ramps. And so what that means is, so most value transfer systems right now work on the principles of databases, right? So you have database entries there, they are maintained by some custodian. So your job as an entrepreneur in that space is to free those entries from the database and from the custodian. And how do you go about that? And that's, in my opinion, where there's not enough work that's being done. A lot of work is kind of happening on the pure, let's call it software level, intermediary level, and providing better code and providing DeFi, but it's very much insulated from the real world. And so there's a lot of work to be done, and a lot of that has to do, and it's a big topic that we probably can't get to in this context here. A lot of that has to do with our legacy implementation that evolve identity and ownership, right? And we are very far away from addressing those. There's many companies, we looked at 160 or so, that use the term, let's say, identity management, something in that realm.
Yeah.
They fundamentally don't understand identity from, let's call it, legal technology perspective. It's all about, at the end of the day, agency as a human observable activity that can lead to a legally relevant outcome. Anyway, so as I said, this is kind of its own topic that deserves many hours of discussion itself. So maybe we don't go down that.
Yeah. But that's a deep area for sure.
It is. So I just published something high level on that, and I'm working on something much longer in a particular context.
Where do people go to see your publications?
So I have kind of this process where I usually post the original article on Forbes, but the limit on Forbes that they give me is 1,000 words, which is hard for me because the topics that I cover are very complex. And so what I typically do is the initial outline is on Forbes, and a couple of weeks later I publish it on another site, often Hacker Noon, where then the article is like 2 or 3 times as long and goes into more nuances and details and whatnot. But I think what I always like to get across is this is, it's meant for education, but also it's kind of self-serving, as in it's a look into our investment thesis in a way. And the emphasis here is on thesis, as in it's our current theory on how we see this space. So if you see something different, and that's the main call to action here, tell me, right? It's for peer review, right? I don't need to have anybody tell me, well, great job. Well, it doesn't do anything for me. Tell me where you see things different, where overlooked resource that was to be had, where overlooked business that was to be had, or you're building a startup in that space. And we're always happy to just give feedback and just view it as peer review in that sense.
Sure. Yeah. So other segments.
Yes. Should we move on with the whole money and CBDC and stablecoin?
Yeah, I'm quite interested in that. I feel like CBDC or central bank digital currency projects are that's definitely, people are getting excited about it, and there's some pretty serious projects. So I'd love to hear about what your perspectives are.
Yeah, I mean, needless to say, if and when they will become reality, and to me, it's really a when, not an if. At this point in time, there's many projects on the way in different stages of development, testing, and so forth. Probably everybody listening to that knows about China, even though it's very questionable how you would actually call these things that they are creating, because in a way it's binary, right? So what I mean by that is you could do one of two things. Either you're creating what Bitcoin set out to do, which is peer-to-peer cash with all its facilities, and it's anonymous, there's no fees, there's no time delays, and it's censorship resistant, and that is, in my mind, difficult to expect that many nation states will do this on purpose. I expect this to happen kind of by accident.
Yeah.
Um, and particularly, obviously, if we're thinking about China, I think they will do quite the opposite, right? So you can think of the current account-based systems very much as DLTs, as in you have a ledger at one account. If you send me, or one bank, if you send me $100 to my bank, then you instruct your bank to adjust your ledger, and next day, if I'm lucky, my bank will adjust my ledger, and then in between, those two commercial banks have to reconcile with the Federal Reserve System, which is in a way saying this is a federated, distributed ledger. Right?
Sure.
And so that's kind of the legacy technology. So my expectation is that really most of these efforts will simply remove the federation out of it.
Right.
So, and that's that. They won't actually create peer-to-peer cash, right?
Right. Of course.
A lot of these papers mention things like AML and KYC and so forth, and that's obviously all the antithesis of what this particular space here is about peer-to-peer cash. And at the end of the day, though, I don't think that any of those systems will be interesting or long-term viable, because again, I mean, they're introducing the old friction. Like the average transaction in the United States right now is done, 35% of those are done by debit cards, and then 30% is actually still done by cash. So look, by physical cash. And yeah, I mean, you and I probably don't use that much, but it's actually the second most common mechanism of exchange. And maybe we kind of stopped explaining this earlier. So like the default medium of exchange obviously has been bytes, right? It irks me to no avail that people on a daily basis, I keep hearing things like Bitcoin is a medium of exchange. That makes no sense whatsoever. The medium of exchange in Bitcoin is bytes as well, right? So that's the medium of exchange that you're using, unless you're using cotton and linen, which would be your printed dollar, then you're using something else. But outside of that, and minted coins, you're using bytes regardless. If you're using the US dollar, Bitcoin, yen, or Pokemons or whatever else you want to use within value transfer, that makes no difference. So the default medium of exchange has been bytes for decades, right?
Sure.
And so as far as transferring those bytes, that's the crux, right? So that's where we need to address the current issues that debit and credit card ACH, and lastly also still checks, by the way. 6% of all transactions are still by check, which I had never actually seen a check before I moved to the United States. Amazing. 20 years ago, because no one in Europe was using this, as far as I knew. But it's still the case. So that's where there's a lot of value to be had, obviously, to fix these systems. That's why I was mentioning in our things like and so forth.
Okay. Sorry, you broke. I missed that little bit, so maybe you could say that again.
Sure. So that's why I mentioned our pre-roll here. We were talking about Calcoin. I mean, a large portion that it's trying to address is the friction that come with the legacy financial systems and dealing out government services, right? So I forgot what the exact number was that the government paid to commercial banks in fees, but I want to say it was somewhere in the neighborhood of $600 million just in ACH fees.
Yeah, and California is a top 10 global economy if it was treated as a country. So it's California is a fairly substantial and material distributor of goods and services. Like the government is
it's the fifth largest economy, and 2 million people in the state are on food stamps. Right? And so the other part is, given that a lot of people are still don't have bank accounts or don't want to deal with banks, they also have to send a lot of checks. It costs the government, and so governments are functions of society, so it costs us, right, as a society, $3.
So here's the question: is Calcoin going to happen? If so, when is it going to happen? And what are the chances that it will not happen?
At this point in time, as far as I know from talking to the people that are involved, they have the expectation it will happen.
Yep. Fantastic.
It will obviously be something that will have to evolve, as in you start with something relatively simple, as in let's call it a coupon system that's digital, and then you may transition to something that's a little more fungible, right? Yeah, we're trying to informally advise on that and point out what we see around the world, what's viable and what's functional, and then that also obviously intersects with what I said earlier. You need to have a functioning identity solution within that system, right? Because a lot of these systems today are also plagued by a lot of fraud. I mean, there's a ridiculous number of people that deceased that died some years ago that apparently still getting some form of government services. But so the larger point being though is, so you need to focus on what are people doing today in terms of like how they are sending money, right? So it comes back to who gets to create money, then who gets to store money, and then who gets to move money, right? And so right now we kind of deferred to these functions mostly to chartered banks, to commercial banks, right? And it's questionable as a starting point, but again, I mean, we're technology investors, and so those ethical concerns, they bother me personally, but they don't really intersect with our investment thesis. But for me personally, it's kind of questionable why we have outsourced the creation of money to these commercial entities, because that just compounds the negative effects in a way.
It right? does. And there's a great book called Debt, the First 5,000 Years. And it's definitely is a good read on that topic.
Which one would wish Jevons, who created this unfortunate definition that everybody learns of money, should have read, because then he would have realized that what he described has never been a relevant form of money, right?
Yeah, absolutely. And that debt is really kind of the core issue.
Well, yeah, no, money, the main function of money has always been lending, right? It still is. It's just a question of who gets to lend it. And specifically, if you also get to create it before you lend it, that adds another element to that. And in my mind, there needs to be a more rigorous standard towards the creation of money when it comes down to what purpose is being assigned for. In my mind, there should only be creation for money for productive activities, right? Otherwise, the externality seems to be inflation within the asset, and then subsequently inflation overall for everybody who has to use this medium. Because at the end of the day, and I think that's a point that goes across all those CBDC outlines that I've read, which is quite a bit, all of them touch on the fact that fiat money, which fiat is not really money, but let's leave this alone. So that fiat is a public good, right? As in, it's not dissimilar to things like roads that the government provides.
That's a utility.
Yeah, exactly. And so if it's a public good and a public utility, then this comes with larger obligation and constraints towards those people that maintain those. And I think we have done not a great job adhering to those. But again, it's to me the solution is not more government or change of government or trying to influence us, although I tried to do my bit in there, but mostly in terms of education. But at the end of the day, as an investor, we just invest in technologies that will go towards that end and simply remove the inefficiencies, right?
Yeah, and I think that's a really great kind of like theme, because we're talking about mostly open source software and technologies.
Yeah, and from an investor's perspective, if you think about bringing back to a much higher level. So I raised money in the first internet, quote unquote, to say we don't have internet 1.0, as you know. But it was kind of hard to even raise $1 million for a fast-growing internet service provider at the time. That's somewhat different today. But as a technology investor, looking backwards now, it's a great time, right? Because back then we were only addressing the transfer of information. Now we're addressing that topic as well, right? We re-architecting the internet of the architecture of the internet completely, right? Decentralized bandwidth, decentralized storage, and so forth. But then we're also simultaneously decentralizing value transfer altogether. So from my perspective, this is the greatest investment opportunity that we ever had or will ever see, right? But when when do you think we'll ever reorganize value transfer on a global basis? And that's even just one sector, right? I mean, we can't even get to all the other things that are possible with decentralized software. But I've been saying for a long time, well, if for a technology investor, if your starting point is all the money in the world, that's a good day, right? You got a lot of opportunities there.
Absolutely.
But maybe one thing that I always like to point out in terms of money. So if you look at like how money is being distributed right now, just on a personal level, and then you extrapolate this to a larger level. So where you have money, right? So you have money in your checking account, and maybe you have a certificate of deposit account, you have a CD account, and then you have a mortgage account of sorts and so forth. So all of these accounts come with certain facilities, as in some of those you kind of want money to inflate, right? If you borrow money, then you may not mind that it's inflating, right? If it's sitting in your checking account, right, you do mind that it inflates. If it's under your mattress, you do mind that it inflates, right? So the obvious thing to do in this case is then build technologies that mitigates against these obvious facts. So my expectation, to fast forward to the solution here and give away the plot, is, well, we will be building technologies that will allow you to never ever hold any quote unquote money in an account where it inflates.
Yeah,
so
say more.
Right? And you don't have to, right? So from a technology perspective, that's what actually everybody has been doing for a long time. So as in, you don't use your checking account as a store of value function, at least not much, right? You don't keep $1 million in your checking account. But then all of your stores of values at the end of the day is some portfolio, some basket of things, right? You think that real estate holds value, you think that stocks and bonds hold value, etc. You don't necessarily use money as a store of value, right? In that sense anymore. And you haven't for a long time. But if you could just automate this function, which we can, right? So right now I do this, and everybody does this manually. I'm probably a little more efficient than most people doing this, because I know about all the latest tools and I can automate it to some degree. But if this function of mitigating against holding inflationary assets could be mitigated down to the second, then there wouldn't be, in that sense, checking accounts, right? There wouldn't be, in that sense, cash, right? Because why would you hold anything that's inflationary even for a second if you don't have to?
I like that. I like this actually. One of the quotes on Twitter I really enjoyed, I forgot who said it, was that Bitcoin is not a get rich quick scheme. It is a not get poor slowly scheme.
I call it money of last resort.
Yeah, that's interesting. It's a good mindset. But I agree with you. And one of the things that makes things exciting is that, you know, when you have machine-based kind of translation, you can kind of have it at the point of transfer, right? So at that point, you don't really have to worry too much about like this concept of a checking account.
Exactly. At that point in time, every function culminates in your wallet, and you decide what function your wallet should have, right? So maybe you don't mind holding $100 cash in there, or $500 is for you. If you should be able to swiping left, right? Like, okay, just swipe this into the lending market, and if I want it back because I want to spend it because some schmuck on the other end still is dealing in shitcoin, okay, here's a shitcoin. So if that's what you want, then
absolutely. It's that should be taken care of. Well, good. You know, I think we're bouncing against the top of the hour, but you know, this is always kind of very engrossing. I think we've taken a tremendous journey through sort of the history and structure of money, and you know, it's always a great pleasure. So you know, definitely would love to have you back again.
Yeah, well, so once I started working through the different levels of agency and what people refer to as identity today, yeah, we might want to do another
Would
session
love it.
curating.
Would love
Yeah,
to do something about so-called identity and really
yeah.
understanding agency.
Yeah, maybe a call to action. So I'm curating. I'm an official advisor to the standards organization. They're called Open Travel. So I'm curating an event for them right now. Where I'm trying to start it up in that intersection of identity and travel to some extent.
That's
To
great.
bring them together, and it's a meeting of the minds, right? Because that organization is providing standards mostly for traveler passenger exchange, right? And to me, it might be a low-hanging entrance point to come up with a solution that will actually find applications across
That's
different
great.
sectors.
Well, I've got some technology companies to introduce you to. So,
Okay,
let's chat about
yeah.
it. But, it's great. It's great to speak with you. And, let's definitely, if you want to keep up with Christian, check out Sustany, their website, and, get the social media from there. And, you'll be able to keep track of his doings. Thanks very much.
Sure.
Okay, bye.
MikoBits.